The Construction Association of Michigan, CAM, has been helping commercial and industrial contractors and suppliers grow since 1885. Now's the time to join. Visit buildwithcam.com. If you're a construction company looking to grow, CAM offers resources to help you build your staff, find more projects, and expand your network. Join today. The Construction Association of Michigan. They're one industry, one resource, one CAM. Join today at buildwithcam.com.
Today's episode of CAM's Building Michigan podcast is sponsored by Priority Health, endorsed health insurance carrier for CAM members.
So right now, we've all been feeling lots of shifts in our lives. We've gone from crazy busy schedules to way more time with our loved ones, from commuting to the office to working from our couches. And that's okay, because Priority Health is always ready to shift right there with you. So whether you're experiencing a shift in employment or you're prepping for a new member of the family to arrive, Priority Health has you covered. Priorities shift, so maybe it's time your health insurance company did too. Find your plan at PriorityHealth.com.
It's that time of year. Time to review your workers' compensation plan and shift to coverage that pays you back. CAMCOMP, part of the Construction Association of Michigan, is the state's leading self-insured group designed for the construction industry. The safer your employees, the more money you get back. The average payback to members is 45% of their premium, a very smart investment. Find out how safety pays with CAMCOMP. Call Juan Ramirez at 586-790-7810 or go to www.camcomp.net.
Hello, and welcome to our 8th episode of CAM's Building Michigan podcast, produced for Michigan's construction industry by the Construction Association of Michigan. My name is Kevin Kohler. I'm the president of CAM and your host for Building Michigan. Our podcast is designed for the construction industry here in the Great Lakes state. Each 20 to 30-minute episode will feature conversations with industry leaders discussing construction projects, trends, business development, workforce, safety, legislation, products, equipment, and other industry-related topics. Thank you for listening in, and let's get started. This is Season 2, Episode 8, and we are really excited to have with us today Danushka Nanayakkara-Skillington, the National Association of Home Builders, NAHB's Assistant Vice President for Forecasting and Analysis. She is also our Economic Forecast Breakfast keynote speaker at our breakfast meeting next Wednesday, February 16th, 7:30 a.m., held during the Great Lakes Design and Construction Expo, taking place at the Novi Suburban Showplace. We hope to see all of you there, and we'll have information on how to get tickets and how to sign up for that here momentarily. Before getting started, let me give you a little background on our guest. At NAHB, she oversees the activities of forecasting and analysis section of the economics group, which includes housing market analysis, industry surveys, developing and maintaining national, regional, long-term, and remodeling expenditures forecasts. Prior to joining NAHB, Danushka worked at J.D. Power as a senior economic analyst in the automotive industry. She holds a BA degree in economics and business administration from Otterbein University and a master's in applied economics from Johns Hopkins University. Danushka, welcome to CAM's Building Michigan podcast.
Thank you so much, Kevin. It's so good to be here.
Well, we're really excited and happy to have you, and we appreciate you taking time from your busy schedule to be with us today. So let's get started.
Yeah, of course, no problem.
Terrific. Let's get started. I've got kind of a broader question for you, then we can drill down more into the construction industry. But from a U.S. economic perspective, where do you see the economy going in 2022 and beyond? What do you see happening?
Yeah, I think, in order to talk about 2022, we have to talk about the last couple of years, right? I mean, 2020 was a year that no one saw coming. We were in a public policy-induced recession. It was a really difficult time to kind of forecast because, normal recession happens when an economy is in imbalance, but this is a completely different ballgame But we did survive 2020. The economy did contract 3.4%. And 2021, didn't we rebound, right?
Sure.
So the economy was the best since 1984. The economy grew 5.7% last year. And just a couple of weeks ago, the fourth quarter data came in at almost 7% growth for 2021. So we saw really strong gains in private inventory investments and consumer spending. And as you know, the consumer spending makes up 70%. It's the backbone of the U.S. economy. But 2022 is not going to be as stellar simply because it is going to slow down. We are kind of learning to live with the virus, and then things are going to kind of normalize a little bit. So 2022, we are expecting around 4% GDP growth, and 2023 a little bit slower than that, probably going back to trend a little bit around 2.9%. That's what we are forecasting for GDP for the next couple of years.
What on average GDP usually is around on I guess on the normal business cycle 3 to 4%.
Yeah. So the long-term average, between 1968 to 2007, before the Great Recession happened, the economy was going around 3.4%.
Okay, right. Very interesting. So
we're going back to trend a little bit in next year, I think.
So kind of looking at that from a residential construction perspective, and I will tell you, Danushka, that CAM is a commercial and industrial trade association here in Southeast Michigan. So we deal more on the commercial side. And what I'm hearing on the commercial side is anywhere between, if you look at AIA or you look at some of the other industry forecasts, commercial, or they call it non-residential construction, it's between 2 and maybe even as high as 5% for 2022. I'm not sure what you're seeing in the residential sectors. Maybe you can fill us in on that.
Yeah, so for our single family, so residential construction is single family, multifamily, and residential remodeling. So for single family starts, 2020 was an exceptional year. We topped 1 million units. It's around 13% growth rate compared to 2019, and 2021 it's around even 11% growth rate. So just incredible years where we are seeing with this 2 years the residential construction, the single family. It's that renewed interest in home ownership. When we are in a pandemic, everybody needed space. It was a buying frenzy last year and 2020. 2022, we are expecting only 1% growth rate. But if we kind of think about 2020 and 2021, it's kind of not really a normal demand year. 2022 would represent around 25% growth rate compared to 2019. That's incredible. And we are thinking, just the low level of inventories and the strong demand should continue to have incredible demand for single family growth for over 1 million for 2022 and 2023. For multifamily, on the other hand, we are expecting 6% growth rate, almost 500,000 units for this year. Multifamily construction has been strong. It did not dip like single family did during the Great Recession. It recovered really well, and we are seeing continued growth for multifamily construction. And remodeling, we are seeing around 6% growth rate for 2022 because of the U.S. has an aging housing stock and the growth in tear down construction because land values and lot value, the lots are hard to come by right now. And then, people are using their homes for more utility now, right? We are doing hybrid work, and then we need more space now. So we are expecting around 6% growth for remodeling as well. So in summary, single family construction gains 1% growth rate in 2022, multifamily and residential remodeling around 6% growth rate.
That sounds pretty healthy. One of the things
Yeah.
I'm constantly hearing about is headwinds, like labor shortages, supply chain issues that we all experienced um, you know, during the pandemic. And there's always inflation looming out there. So what are your thoughts on any of those items, and do you see any of those items influencing maybe that 6% in multifamily or remodeling, or even the 1% in single family?
Yeah, so we actually take into account all of most of the supply side issues. So when we look at the broad economy, there are over 10 million open jobs right now, right? But in construction, the lack of skilled labor is there. It's been a chronic issue for the last few years too. So when I say construction, it includes residential and non-residential. So as of December, the job openings rate in construction were around 337,000 open jobs.
Wow.
So attracting, incredible number, right?
Yeah.
So attracting skilled labor is going to be a key objective for most of our builders. And it is going to be challenging because the labor market is strengthening. So we have at NHB has estimated that we need around 61,000 new hires every month in construction trade to keep up with both the industry growth and the loss of workers through retirement, or either they're just simply leaving the sector for good too. So what this means is between this year and next couple of years, we need like 2.2 million new hires for construction. So we need people to come into the construction trades. It has been really hard. The Great Recession was just devastating for the housing industry, and many people just left the labor force for good. And we have an aging labor force right now. Young people are not really interested in working in construction trade. So we need more young people to come into the trades. And then the share of women in construction has also been around 10%. Women make up almost half the entire labor force. So we need more women in construction trade, and also the immigration. We need like some sort of like sensible immigration policies to bring in some new workers into the country as well to fill these gaps. So that's on the labor issue. And you talked about inflation as well. Inflation is at near, I think, 40% height at this point. It's the higher prices for shelter and used vehicles. So I think if anybody was in the market to buy a used car last year, it was a sticker shock, right?
Sure.
So, in December, if you compare December 2021 with December 2020, like consumer prices were up 7%. It's the largest year-over-year gain since the early 80s that we've seen. So that was on the CPI. And the core PCE, that's the core personal consumption expenditure, that's the Fed's preferred measure for inflation. So when the pandemic happened, they were really accommodative monetary policy, and they were okay with the core PCE going above 2%. But what happened in 2021 is that it actually was 4.5%. And we expect it to be elevated for this year as well, around 3%. So on, the supply chain issues, just the sheer amount of demand we saw from the consumers because of the pandemic for goods, and then just the reopening of the economy, all of these just contributed to all these price increases in these sectors. So did I answer your question? Because I felt like I've been like rambling.
No. It actually does. And interestingly enough, on my way into work today, I was listening to one of the talk radio stations in town, and they were talking about escalating gasoline prices, which definitely affects all of us in construction. And they're talking about having the highest gasoline prices ever. At some point this year, they're talking about 25 to 50 cent increases every month for the next couple of months. So a state like California that already has gas prices at $5, if you add another dollar to it, boy, oh boy, that's going to be tough. I'm not as worried about California as I am about Michigan, of course, but the escalating gas prices here are definitely going to impact, both residential and commercial contractors.
Yeah, absolutely. The energy prices are a huge driver in inflation as well. I think, if I remember correctly, energy costs are around 30% higher now compared to a year ago. So that's gas and energy inflation measures. Food is
Yes.
up around 6%, and yeah, so yeah, it's definitely elevated.
Wow. Well, that kind of leads me into my next question, which is, the Fed is very committed to raising interest rates. I think we're going to start seeing that maybe even as soon as next month to try to slow the increase of inflation. What do you think is going to happen with interest rates? I know some people are saying maybe 3 raises by the end of 2022. I've heard as many as 5. So, what do you anticipate happening with the Fed?
Yeah, 5 seems, I
Excessive?
don't know at this point. If you had asked me last summer, what would it be? I would have said, there's not going to be any rate increases for this year.
Hmm.
But with the inflation measures just being so out of control, Fed rates are definitely in play right now. In our forecast, we are, in January, when we did this in early January, we had built in 3 rate hikes. But now, I think 4 is more than likely. We are expecting 25 basis point increases. So for like total of 100 basis point increase in the Fed fund rate for this year, and then 3 more rate hikes
Oh, wow.
for next.
Okay.
Yeah, so that's what we're thinking. It's going to be pretty aggressive. And, the monetary policy is just an important driver, when we think about the global economy as well as the financial markets. So it's going to be a kind of a little bit of a shock and putting the brakes on the growth a little bit, I think. And this means, the 30-year mortgage rates are going to be higher as well now. And that means, it's going to be harder for first-time home buyers to come into the, to get their first home. We are not going to see, I think the mortgage rates, in 2020, 2021 has been historic lows. Everybody, that's kind of one of the reasons that it just, the buying frenzy was insane because the rates were so low. And people refinanced, and they now have, a lot of people did like a lot of cash out equity as well when they refinanced. So when the Fed is going to increase the Fed rate, the 10-year Treasury is going up too now. That all in turn is going to mean that people are going to be paying higher mortgage rates this year.
Yeah, that was my next question. What do you anticipate happening with interest rates or mortgage rates? And, do you anticipate that affecting the housing market, which it sounds like it probably will have some impact on the housing and actually commercial construction markets?
Yeah, it is going to. We are expecting around 4% interest rate for this year. And that's definitely going to price out some, like a lot of homeowners, like potential homeowners. So the affordability is definitely coming into play again. At this point, we measure affordability at NAHB by the Housing Opportunity Index. It's at decade low right now as well. It's at 57. So that means only 57% of the existing homes are affordable to a typical family that makes around $80,000. Only 57%. That's an incredibly low number, and we need to be able to make sure that housing is affordable to a potential first-time home buyers. And when we are thinking of these these groups, now we are thinking about the millennial generation too. The oldest millennial has turned 41. Hard to believe, right?
Yeah,
sure. I think that the term means geriatric millennials now. So the peak home buying years are between 25 to 45. So they are in these peak home buying years. And you have to think about this generation because they came out of, the older millennials came out of college and all that time during the Great Recession. and they don't have the in wealth. It's very difficult for this generation to put that 20% down easily. They have student loans, and all of these factors, and with the higher interest rates, that's just going to put another damper on the demand side.
Yeah, I totally get it. And when you think about it in a larger, in a longer term perspective, 4% interest rates are fairly affordable. Boy, I remember when I bought my first house, it was a lot more than 4%. In fact, I think I even bought my first house with one of those, I don't know what they called it, but a flexible rate mortgage that changed reset after a year, and you could refi after that time frame. But in the long-term perspective, 4% is not a terrible rate, but it's certainly higher than what we've been paying, and it probably will put a damper on a few things, right?
I think, and also trying to think about is the fact that the house prices have skyrocketed.
Oh yeah.
I'm sure that first house that you bought with a higher interest rate, you cannot buy that house anywhere close to the price anymore. So so when we think about like 2021, I feel like it was the year about home prices. The Case-Shiller Home Price Index peaked in the summer in August. Like the prices were up almost 20% year over year for a house. It's incredible.
Wow.
So the house prices are definitely like higher, and we do expect it to be going down a little bit, but it's just the fact that we don't have enough existing inventory to bring the house prices down faster than most people would like.
Absolutely. Well, hopefully the Fed stays on top of it and we can get a handle on things and, move inflation down, interest rates up slightly, and not punish the consumer. It's a tricky business, I guess.
Yeah.
I
don't envy the job of the Fed.
It's a tough job for sure. Thankless. So I have one final question for you, and it revolves around the infrastructure bill and some of the social spending that's gone on during the pandemic. Obviously, those are factors that have contributed to inflation and some of the cost increases we're seeing. Well, at least the social spending. Do you anticipate the infrastructure bill in some form, moving forward and impacting, local economies?
At this point, I think the bill as it is, I think that's kind of dead. Also, I must say, I am not a policy person, so don't really hold me to this answer. But I think maybe some form of the bill could pass. But at this point, I really don't know, even if this is going, I'll tell you from my perspective, when I build when we build the forecast, we don't really factor the bill in at all at this point, because even if it is going to increase spending, it's just going to be spread out through so many years. I don't even see it making a significant impact on the economy right now, because I think the Congress still has to come together and then figure out what parts of that bill they're going to focus on. So I don't know if there's any clear direction at this point, but I'm not really, paying too much attention to it at this point, to tell you the truth.
Yeah, I totally get it. I think it's in the process of being, I don't know if you call it rewritten or redesigned, or if it's just going to end up on the cutting room floor. But I think they have a battle ahead of Congress to get something passed.
Yeah, exactly.
Fair enough.
We'll see, though.
Yeah, that's right. We'll see. Danushka, we're gonna wrap this up here in a couple minutes. Do you have any closing thoughts or words of wisdom for our listeners?
I hope everybody will come out and listen to my talk next week. I think, I'm going to have a lot more information, a lot more details. And, I know it's going to be early, but, it's 7:30 in the morning. But I think it will be interesting. And I hope everybody will come prepared with questions, what they have, any thoughts, comments. I'm excited to be there next week.
Well, we're certainly looking forward to having you at the Breakfast Forecast meeting on February 16th at 7:30 in conjunction with our Great Lakes Design and Construction Expo, which is produced by the Construction Association of Michigan and the Home Builders Association of Southeastern Michigan. Tickets are still available. They're $50 each, and they can be found at miconstructionexpo.com or by calling us here at CAM at 248-972-1000 or by reaching out to any of our CAM employees. Danushka Nanayakkara-Skillington, on behalf of all of CAM, thank you for being with us today on our Building Michigan podcast. And I personally look forward to officially meeting you next week at the show. Thank you.
Thank you so much, Kevin. Thank you so much for having me. It's been a pleasure.
Thank you. Okay, that's pretty much a wrap. You did a great job. Hopefully, my questions weren't too simplistic for you, but I think you did a super job in just kind of whetting people's appetite for next week, and hopefully they come out to get a little more information, ask some specific questions of their own.
Fantastic! It was great. I hope people listen to it, and then we can get an idea of what I will present next week. So.
Absolutely, yeah. I apologize for last week. We were supposed to have this massive storm here, and as it turned out, we did have a lot of snow. It's kind of like your internet feed that you're on right now. Mine at home, I live kind of in a rural area, and it can get a little questionable at times. So I was concerned that if I was stuck at home and recording this, we might have some trouble. So I think it worked out well today.
Oh, yeah.
In the office. And
that's no problem at all. I'm in Orlando for IBS this week.
Oh. All right. Yeah.
I just had the morning free, so it's good. I'm glad that we were able to reschedule, and So
Yeah.
it's funny when you said that about the snow. I was like, oh my God! I used to live in Ohio, Columbus, for 5 years. That's where I did my undergrad, and I was like, I do not miss the Midwest winters.
Yeah, Columbus got pounded during that storm, or at least they got a lot of rain and freezing ice or freezing rain. So yeah,
oh my God.
My son lives in Texas, so he tells me all the time, Dad, it's beautiful down here. You should come down here.
Until it gets to the summer.
yeah, exactly. Until you get to the heat of summer when it's 112 every day. And the dry heat doesn't really. Exactly.
So you just burn to death in the summer.
Yeah, absolutely. You cook.
I look forward to meeting you next week, Kevin. You have to come by and say hello for sure if you see me.
I definitely will. In fact, I'll be at the breakfast meeting. We have it's also in conjunction with the CAM annual meeting. So that afternoon, I have to give a big speech, and we have a whole luncheon going on. But all of my past directors, all my past chairmen of the board will be wearing these custom-made red sport coats. So I'll have my red sport coat on that morning. So you'll be able to pick me out in the crowd.
Oh, awesome. That'll be great.
I look forward to meeting you. Thank you.
I look forward to. Oh, same here. Thank you so much. I'll see you next week then.
All right, great. Have a great day. Thank you.
Okay, you too. Bye-bye.
Bye.
Thank you for listening to Building Michigan, the official podcast of the Construction Association of Michigan, hosted by Kevin Kohler, CAM President. We appreciate you spending a part of your day with us. If you have a second, please share our podcast with industry colleagues, leave us a review, and connect with us at www.buildwithcam.com. That's all for now. Be sure to subscribe to Building Michigan wherever you get your podcasts, and join us for the next episode.
Today's episode of CAM's Building Michigan podcast is sponsored by Priority Health, endorsed health insurance carrier for CAM members.
So right now, we've all been feeling lots of shifts in our lives. We've gone from crazy busy schedules to way more time with our loved ones, from commuting to the office to working from our couches. And that's okay, because Priority Health is always ready to shift right there with you. So whether you're experiencing a shift in employment or you're prepping for a new member of the family to arrive, Priority Health has you covered. Priorities shift, so maybe it's time your health insurance company did too. Find your plan at PriorityHealth.com.
It's that time of year. Time to review your workers' compensation plan and shift to coverage that pays you back. CAMCOM, part of the Construction Association of Michigan, is the state's leading self-insured group designed for the construction industry. The safer your employees, the more money you get back. The average payback to members is 45% of their premium. A very smart investment. Find out how safety pays with CamComp. Call Juan Ramirez at 586-790-7810 or go to www.camcomp.net.
The Construction Association of Michigan, CAM, has been helping commercial and industrial contractors and suppliers grow since 1885. They provide contractors leadership through aggressive lobbying, construction project reporting, safety and education training, industry promotion, insurance, and banking. Are you an owner, developer, or buyer of construction services? Hire a CAM member to get your project done on time and under budget. They are one industry, one resource, one CAM. Check them out at buildwithcam.com.